In this video, I'm going to show you how to read market structure properly. You will understand everything when we move forward with this video. Market structure, basically, if you want to understand it properly, you have to understand the volume. In this situation, you can clearly see that here we have a bearish trend and then we have a bullish trend. What I mean by a bullish trend is that you can see we have bearish candlesticks here and then we have bullish candlestick. But clearly we can see that the bullish candlestick is more than the bearish candlestick. It's like this if you want to understand it very clearly. This bullish momentum is bigger than this bearish momentum if you want to understand it properly. So the moment you see that price action is bigger than the other one, you should always think of it as if like the market is going to push in that same direction of the trend. Like for instance, if we have a bullish candlestick like this and then we have a bearish candlestick like this, obviously this goes to show that here this is small, this one is starting to be bigger. So that means we have a huge volume of sellers in the market. So you should always look for a trade to the downside. But it doesn't always work like that. The market is likely, if you see some, let's say right now you see a price action like this. Most of the time in the lower time frame, you will see the market consolidating before it can shoot to the upside. This move will be very visible. You will see the market moving very slowly. If you compare, let's say you compare this move here and then the consolidation, you might even see extra, let's say maybe 5 candlesticks here before we can see another move to the upside. That's how you should understand how to read price action in this way. But we have a lot of things that we need to discuss to understand this properly. So from here, guys, if you see the market like this, that means the market is likely to retrace back maybe around these areas and then push to the upside. Let's look for another example. Here we have a bullish candlesticks. You have 1, 2, and 3. And then we have 1, 2 on the bearish side. You can see clearly that means the market was just correcting here. This is an impulse. So that means the market was moving like this and then it shoot down aggressively. Then in the lower time frame, this is where you should be looking enter the market here. You have to wait for the market to give you almost the same as this correction and then look for a trade to the downside. Don't worry, throughout the video I'll even give you an example so that you can understand this properly. It's not that difficult to understand it, but you'll just see with some few examples. So here, guys, you can see this is a strong move. This is a strong move. Even the body of this candlestick, even this body here, is not even bigger than this one. It goes to show that the market is still very strong to the downside. And obviously we can see from this push here to the upside that so many people tried to push the market here, but it closed bearish. That is why most of the time you'll see the market retraces to the upside and then shoot to the downside very aggressively again. But sometimes it can be very, very slow here before it can shoot to the upside based on different time frames. But I'll even show you some different time frames if you stick out through the video. Here we have different types of candlesticks here. To understand them, you can see we have a bearish candlestick here and then we have a bullish candlestick. But based on these candlesticks here, we can see they are all engulfing. This candlestick there, the second candlestick is engulfing the previous bullish candlestick, and even this one is engulfing the second bearish candlestick. So if you see the market behaving like this, let's say right now you open your charts and then you see the market behaving like this. So you have to simply, this is a single chart candlestick pattern here, guys. You have to simply, let's say you just put a line here to show that right now the market was moving to the downside and suddenly we see a push to the upside. This is where you should be looking to enter the market to break this high here. That's how you should at least try to understand it very clearly in this way. So another example is this one. We have the first candlestick, we have the second, and then we have the third. But this bearish volume here did not trade below this lows here. We don't count this one. You know why? It's because we have the ray sequence of bullish candlestick. So we take this the ray candlesticks as a move to the upside alone. And then if you consider this bearish candlestick, that means we have a smaller move to the downside. We still have the major low here, which is this low here, and then we have a move to the upside, which is this candlestick here, and then suddenly we see this bearish candlestick. This is where we have a single candlestick pattern, and this single candlestick pattern will give us a break of market structure. This one, this candlestick, and this one, because we can clearly see this bearish candlestick is breaking the bullish candlesticks low. So what I mean is that you have to see, let's say for instance, the other one, let's say this is just just a bullish trend, and then we have a bearish trend here, bearish. If you see the market doing like this, you have to wait for at least a push. The other one has to be bigger, no matter the candlesticks here. Even if we have 5 in here and then we have 2 in here, if this one is bigger, that means the market is likely to retrace back in the lower time frame and then shoot to the downside. And then another thing that I want to point out is that if you see a candlestick like this in the lower time frame, you have to see some sort of a fake out like this. As long if we are still trading throughout this time frame here, let me just make it clear, guys. Let's say this is our daily time frame. We have this move. Let's say this is Monday and then this is Tuesday. So here on Wednesday, you have to wait the whole day for the market to give you a proper sell setup. Sometimes it can even skip a day and then it happens maybe on Friday, just like that. You have to understand it in that way so that the market can be at least a little bit not challenging anymore. So let's look at the one with multiple candlesticks here. You can see we have 1 and then we have 2. This here is not a break of market structure. Even if it breaks, even if it was trading above here, it's not a break of market structure because we still have a volume of these 2 candlesticks here. This candlestick here, this bigger one, is the one that changes direction because we can see we have small bearish and then we have 2 bullish candlesticks here, and we can see the bearish is very small. This one is bigger right now, so that means the market is likely to move to the upside. Even this one here, we can clearly see that the market was bearish and then suddenly we see a sharp move to the upside. This candlestick is why you will be looking to enter the market short, to enter the market long. I mean to say, sorry about that. You are looking to enter the market here if you are in the daily time frame. Even in this example, guys, you can see clearly that this one candlestick here traded above this 2 bearish candlesticks. So that means in the lower time frame, you'll be looking to enter long around here because this is a bullish engulfing candlestick. Obviously, you'll be looking to enter long here, and then your first take profit is around the previous high. So let's say you entered here and then you take your profit around here, and then the market suddenly do something like this. So what I mean, guys, is that we can clearly see that here again, if we look at this example again, we have 1 and then we have 2 and then we have 3. We can see the momentum of this bullish candlestick ended here. If we put a line like this and then we put another line of this bearish candlesticks, it's something like this. And yes, guys, we consider this as the same as this high here because this is the starting point. All we have to worry about is the break, and then we can clearly see that the market broke this. You might be confused why I am adding this high here. It's because obviously we can see that the market was pressing down. So let me make this a clear candlestick. We can clearly see from this candlestick here, the market opened here, we move to the downside, and then we push to the upside, and then we come here and close. Here it shows that the market was pushing to the downside. From here, the market was just pressing to the downside. So that is why we consider this high here to complete this pattern here. And then what you need to do in the lower time frame, when this candlestick closes, that means in the lower time frame, you'll be looking to enter short. And it's the same example as this one here. That is why in the lower time frame, the market was just trying to push lower and then pushes lower. But then let's read this one properly around this area. I want to show you something. We can clearly see that this one and this one is having a bigger momentum to the downside. And then on the next day, we can see that price was trying to retrace. This candlestick tried, but it did not break this high here. And then if you are looking to enter short around this area, that means you will wait again for the market to trade below this single candlestick. This candlestick has to be all bearish, the one that breaks to the downside, and then you'll be looking to wait for the retracement and then wait for the market to push lower. I'll even show you some examples if you're still confused with this video, but you'll understand it. It's not that difficult, guys. All you have to do is understand the momentum of the candlestick, and then that's it. So from this example here, we can see that we have this bearish candlestick here, and then we have this bullish candlestick, which is also a rejection. So obviously some of you will be looking to enter long around here for the market to push to the upside. But obviously if you're looking to enter long, that means you will use your lower time frame for confirmations like that. But then suddenly we can see that the market traded above this previous high and then closed bearish. So that means right now price action is trying to push the market lower. But because this bullish momentum did not break this high, that means we are still not considering a buy setup. That is why you have to wait, guys. And then we can see this candlestick is the one that broke everything, and then the market retraces, and then you see a move to the downside. It's not not even that complex to understand it, but all you have to do is just look at your candlestick and then look at the candlestick that follows. We can clearly see that the market broke this low here and then it retraces and then shoot to the downside. The same thing will apply every time, guys. The same thing will always apply. This one is not considered. We can see clearly that this first candlestick and the second candlestick did not break the high here. Take it like this. This is just a pair. Just pair them. You will see that there is no high to give you a move to the upside. So at least if this candlestick was trading above this high here, we can still consider a retracement for the move to the upside. That is why you see the market breaking here to show you that I am moving to the downside. In reality, this will give you a proper trade like this. You will be able to enter the market right here if you use these candlestick patterns correctly. But let's move on to another example. And also don't forget, guys, to read the wicks here. They are very, very important. Also, another example is this one. We can see from here, we have a move to the downside. This one, I don't like it because we have a bullish engulfing candlestick and then also a rejection after a bullish engulfing candlestick. So this one I will avoid. Obviously, I will be looking for the market to shoot lower. I don't like to see a rejection after a bullish engulfing candlestick. Like this one here, we have a bullish engulfing candlestick and then a rejection. That is why you see a push to the downside. This high was also manipulated. This video is not about that, guys. So if you look closely, we have this bullish candlestick. It traded above this high, but this is not a complete break of market structure, because we have a series of 1, 2, 3, and 4 and 5 of bearish candlesticks. Also, unless if price did something like this to break all of this candlestick, that's why we should consider a valid break of market structure. Even this one here, just because it broke this high here, it doesn't mean price is going to retrace and move to the upside, because we still have a series of these bearish candlesticks here. Price has to trade above it and also making those bullish candlesticks without even a bearish candlestick in between. That is how you validate that break of market structure. So here we can see we have one again, and then we have a bearish candlestick. Here, guys, look at this price action. The other one is pushing to the downside and then the other one is pushing the market to the upside. So that means the market is just fighting here. So that means this one is just being avoided. And then suddenly we see that a bearish candlestick, these two bearish candlesticks here, broke this low. That is why you see a minor retest and then a move to the downside. This is what we consider a valid break of market structure. This will give you a clean break of market structure. This will give you a clean break of market structure, and you will avoid being in a trade where you are being manipulated most of the time. If you read this price action like this, you will understand the market very clearly. It's not even that challenging to understand it, but I guess you have to put more time into your practice. And then we have this, you see this bullish candlestick and this one. They did not break any sequence here. So that means it's just being avoided. Even this one did not break anything. Even this one here did not break anything. And then suddenly we see this, see a bearish move, and then we see a break. This is where the trend will change. See? And then the market retraces here and then it started to move to the upside. You will understand it, guys, if you read price action like this without even looking at anything on the market. You just see this pattern forming. Look at this one. This one, obviously you'll be looking to enter the market for a sell. Okay, maybe you could have caught this move, but obviously you'll be stocked out. But then the market will give you the next direction. It will show you that, bro, I'm trying to move to the upside. Where did you enter a sell? And then it broke and then it started to retest and then it moved to the upside. There is different ways to enter the market right here. I'll show you an example later on the video. Let's look at this example here, because this one will give us a lot of information, because we are reading price action plus volume. If we look closely around this area, you can see we have a bullish candlestick here. Bullish. It was being broken by this candlestick here. So that means we have a move to the upside and then we have a move to the downside. So the next thing is just a retracement. And this candlestick did not trade above this high here. These two highs of this combined candlesticks. And then we have a rejection candlestick. Obviously, even if this one here is still a bullish engulfing candlestick, the market gave you a rejection. That is why I said I don't want to see a bullish engulfing candlestick plus a rejection. So if you read price action from here, you will understand that the market obviously is moving to the downside. It even gave us a signal with a rejection candlestick around this area to show that I'm still moving to the downside. And it confirms that by breaking this low here, this low of this bullish engulfing candlestick. And also it confirms again with a single candlestick pattern, because this bullish candlestick here did not trade above any of the bullish candlesticks here. That's how you should understand it, guys. It's just plain simple like that. And this bullish candlesticks, guys, has to be in some sort of a sequence, if I may say. Even this one, this example here is the same as this one here. We have these two candlesticks. They were broken by this bearish candlestick here. But then if we look closely, this bullish candlestick and this one did not break above any of this highs, and then we have a rejection. That is why you see this move to the downside. That's how you should at least try to understand it. It's plain simple if you try to understand it. And then also the same thing here is the same thing here. Look, we have a rejection. This bearish candlestick traded below this low of this bullish candlestick, and this is a single, this one I'll say multiple candlesticks. And also we have a bullish engulfing candlestick here, but this bullish engulfing candlestick did not trade above this, did not. And then we have this true rejection. That is why you see the market move to the downside. I hope I am very clear. It's just that I'm having a fever today. Never mind my voice. I'm just trying to give this information out as soon as possible so that at least you can see some light in through the market. So let's look at another example. We have this pattern here. This is the higher time frame. So what you're looking at here is that the market is moving to the upside, okay? And then we have this candlestick breaking this low here. So that means the market maybe manipulated this low and then it's trying to push to the upside. But in reality, if you look at it closely, you will see the same structure. Let's say right now you are trying to enter the market, let's say in the lower time frame here, or maybe around here. So that means in the lower time frame around this area, you will wait for the market to give you at least a break of market structure like this, and then you'll be looking to enter long. But look, the market went down. What happened over here? So in the lower time frame, obviously the market has to give you a setup before it can break this low here, because this volume here is the one that is holding the bullish trend. I hope you understand what I mean. What I mean is that these two candlesticks here, guys, these two candlesticks here, they are holding price to the upside. But if any of these candlesticks here break, that means the trend has changed. So that means the market is going to move to the downside, and we can clearly see it here. If you are going long without any confirmations here, I don't know, that's on you. You have to use proper risk management, because I'm not liable to take your trades, guys. I'm just sharing my information. This is just for educational purposes only. So we will go to the lower time frame around this area. From here, guys, look, we have this move to the downside. It broke this volume of this bullish candlesticks, and then this bullish candlestick did not trade above any of this high, but this bearish volume here did trade below this lows, and then that is why you see a retracement and then a move to the downside. And even here you can clearly see that we have a break. Let me clear this. We have a break. This is a single pattern. What I mean by a single pattern is just that price is just breaking the low of one candlestick, unlike this one here is breaking two. This is just multiple candlestick break, or whatever you can call it, whatever you want, guys, it's fine. And then we have this bullish candlestick. So that means we'll be looking to enter the market short, but price broke to the upside. So right now we'll be looking for the market to move to the upside, but then the market again broke to the downside. So that means if you entered long from here, you are in a loss. If you entered short from here, you are in a loss. Or it's long and short, but then the market doesn't leave you behind, because you know how to read price action, because price right now broke this low here and then it shoot to the downside. That's how you should understand it. It's not that difficult. I hope right now you have a clear view of what I'm talking about. And then we have this move here, and then we have a bullish candlestick. Oh, but this bullish candlestick did not trade above this momentum here, so that means we are bearish. The only thing that will change your mind is this. Even from this scenario here, look, we have this bearish candlestick. For us to look for a trade, we have to wait for the market to trade above this high, as we can see by this candlestick, and then we have a retracement. The market moved to the upside. So that means right now we will be looking to enter long again, but the market is still short. So for us to be long, price has to break above this high, but price did not break above this high here, and suddenly we can see that this bearish candlestick, this bullish candlestick here was broken by this bearish candlestick. That is why you see the market moving to the upside. even breaking this. I hope we have a clear view on that, guys. Let's look at the lower time frame around this area and see what's happening. Okay, we have the low. The market was just shooting aggressively to the downside. Even if you try to enter long, price will not allow you because price has already broken this low here. This is the low of the bullish momentum. Okay, so that means if right now you want to go short, you have to wait for the market to at least manipulate a high and then to go short. If the market doesn't manipulate any high here, you have to wait for another higher time frame analysis, if I may put it that way. So because right now, if you want to enter the market, you can't just enter the market solely on, let's say maybe you put a trend line like this and then you wait for the market to touch a trend line and then sell. You have to wait at least for the market to manipulate that trend line like this and then you sell around this area. So from this trade, that means right now, because we have this high, we have to wait for the market to break it and then go short. Because in the higher time frame, you can clearly see that price has already broken this and price did not even give us a setup. So let's look at how the market even played out on this one. You can clearly see that the market broke to the upside and then shoot to the downside very aggressively. And the same pattern will always repeat over and over and over on every time frame. This pattern will always be there. You can even build up your trading indicator. So you have to stick around because I'm going to show you how to do that with one of my friends around the world. So from here, there's nothing that right now you don't understand so far. If you don't understand, please repeat the video. Don't mind my voice, just take the information only. I'm having a fever right now. So let's move on to another example and see what the market will behave on different conditions. We have a daily time frame, have this daily, we have this daily. This one here, yes, it's a rejection, but price broke above it, which means right now price was just consolidating and then broke to the upside. So that means anything comes here will be a potential buy area. That is why you see price broke this high and then all we can see is just price breaking. And here, this one is plain simple. You have this candlestick pattern here and then price was just melting, was just trading in a range here. Price was just ranging. So we can clearly see that we have one and then a two. Then this single candlestick alone here broke this high. So that means right now for the market to shoot to the upside, we can wait for a rejection candlestick because there's no move that is breaking. You can clearly see even this bullish candlestick did not, because price was just consolidating. Let's read this price section very clearly. Maybe you'll understand what I mean. We have this one and then we have this candlestick. Bearish is small, bullish is big. That means we are bullish. So right now, because we want a better price, we can still try to do the same around this areas here. And then look, this candlestick did not break above this bullish candlestick here, did not break above this high. So that means price did not confirm. Even if you try to enter the market will just put you in a loss with this moves here. And then because we are still bearish based on this candlestick, we have this bigger vision, but we are reading price around this area. We have this move here, but this bullish candlestick did not do anything. But then suddenly we have a bearish candlestick. So to be bullish based on the bigger picture of this, we have to wait for price to trade above, and we can clearly see it here. Then you can enter the market however you want, and then that is why you see the market becomes bullish. Even this one here, it broke this high, consolidate, move to the upside. It's just the same pattern over and over again. If you understand how to read it in a single pattern, in a multiple candlestick pattern, in that way it will be very simple to understand. Let's move on to another example here. Look closely. We have this bearish candlestick, we have this bearish candlestick. To be bullish, a sequence of bullish candlestick has to trade above all these highs here. Right now I'm sure I made it that clearly. A series of bullish candlesticks has to trade above these highs here to make it a valid break of market structure. So you can clearly see price did not do that. This one failed because we have to see this one is a series, but price did not trade above here, above this high. So that means this one is not valid yet. Then suddenly we can clearly see that we have a bearish candlestick. Right now we have one. In this previous example we have, and then two, we have to see bullish candlestick trading above this high to be bullish, and then we can see it by this candlestick here. Then you can wait for a retracement and you can look to go long here. You can even build a trading strategy like this. Look, after breaking this high, price came down because we are looking to go long. you still have to do the same thing. Let me show you. You have this price will be correcting. This is just a correction. From here, you can clearly see that there is no way that you are going to buy here. This bullish candlestick here did not trade above any high. That is why you see price dropping to the downside. And then we have this bullish candlestick again, but did not break above this high. Let's clear everything. And then because this is the lower time frame, we are looking to go along based on this scenario in the higher time frame. Then you can clearly see it happening here. This bullish candlestick trade above this bearish candlestick's high. And then we have another retracement, and then we move to the upside. I hope you understand it, guys. This is just plain simple. So let's move on to the last example of this video. This is just an example, guys. This is not a trading strategy, okay? Do not do something like this. Let's say you are in the 2 hours time frame and you see this kind of structure. What are you going to do? Obviously, we can see that we have one bearish candlestick. This second candlestick did not trade above this high, so we wait. And then we have the third candlestick that broke above this high here. So if we want to go along here, where should our entry be in this kind of situation? Obviously, this is not a trading strategy, okay? Obviously, you can look to go here on the open and close. Yeah, if you want to build a trading strategy like this, also find some invalidations, stop losses, how to enter, target, and so forth, and even trade management. We all have that in our Discord community group. If you want to check it out, you can come to our Telegram and then you'll find all the links there. And you can also text me there so that you can at least communicate with me and come to the community and chill with us. So we put a line here. In the lower time frame, we'll be looking to go along here based on price action. So let's move on to the lower time frame and see. This is the lower time frame. This is the 5 minutes. And obviously, I have made a video where I am showing you how to make an entry with manipulations. And you can clearly see that because on the higher time frame, we have a confirmation. In the lower time frame, we have to find a confirmation. The higher time frame on the 2 hours was just an analysis. In the lower time frame, 5 minutes, we are looking to make an entry based on some market structure, some manipulations, and so forth. So we will be looking to enter the market with this candlestick and then wait for the market to move to the upside. Plain and simple. And also, let me see. Those candlesticks, they are just everywhere, guys. I want to find at least one. Here we can see price broke, shoot to the upside. Price broke, shoot to the downside. Here it broke, but then it went down. Here it broke, shoot to the upside. Even here it broke, shoot to the downside. But you have to build a trading strategy because the market can bully you a lot. So right now we enter the market here, put our stop loss somewhere, and then we wait for the market to move to the upside so that we can chill and watch how the market behaves. That's how it goes. And then we can clearly see that the market moved to the upside. But this was just an example. This is not a trading strategy. And then even in here, if you don't have a confirmation, you can wait for the market to break this high. This will be your confirmation. Because also we can see that price also traded below. It's like this, something like this. And then price gives you a price action here. And then the market moved to the upside. This is what we call price action. There is no need for anything in the market. So I guess, guys, I'll see you in another video. I'm still having a fever, so please consider subscribing. 1 subscriber is equals to 1 prayer for my fever. See you on the next one, guys.